I think I need to share my trading view, Abi.
Hello,
Can you hear
everyone.
me?
Good evening. If you can hear me, let me just see. Yeah. Okay, Noble has been here. Noble says, let's begin. Yeah, we've started. We've started, Noble. Yes, we are live now. So if you know anyone that's supposed to be on this live with us, just send them a message and tell them that we are live. And if you can hear me, so let me just see you drop maybe one or yes, I can hear you in the chat. If you can hear me, let me just see you say yes, I can hear you in the chat. Nobody's here. Zara is here. Ebube is here. Okay, so let me just send a quick update to the community, letting them know that we are live and they can join us. So let me just send a quick update to the community. If you're excited to be here with us in this live, just drop I'm excited so that I will know that yes, you are really, really excited to be here with us. Just drop I'm excited and just give me a moment. I'm trying to update the community and let them know that we are live. Okay. Okay, so I'm updating the community. Just a moment, guys, please. They need to know that we are here and they need to come on board now. Okay. Hi, Kelvin. Kelvin, please let me just see the countries where you guys are joining from in the comments. Let me see the countries where you guys are joining from. Any country you're joining from, just drop in the comments because we are trying to know where we have where our users and subscribers are joining from. So we really love to know where you're joining from. So let me just see the countries where you're joining from because oh, Kelvin says he's from Ghana. Wow, it's really, really nice to have you, Kelvin. Welcome. Welcome, welcome, welcome. Welcome. Okay, so just drop where you're joining in from in the comments. Drop where you're joining in from the comments. And while we are at that, I'm also trying to update the community and let them know that we are live so that they can join us. Okay. Okay, 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 okay. All right. So let's just get this started. Okay, so if you've not met me before, I'm Zara. If you're in the community, you'll notice that I'm always dropping updates in the community. Yes, this is Zara. Zara is always dropping updates in the community. And like we always say, Fxlens is an AI powered app that helps you with your chart analysis and helps you to make better and more informed decisions when trading. Okay, Mohammed Osman, it's nice to have you from Lagos, Nigeria. It's nice to have you here, Mohammed. It's really, really nice to have a lot of our Lagos people. We know we have a lot. I think a lot of our users are from Nigeria, and it's really nice to have you all here. So, like I was saying, FX Lens, our whole goal and purpose at Fxlens is to make sure that we develop a holistic trader that is good and well grounded in every aspect of trading, starting from your technical analysis to your risk management to your psychology. Of course, the FX Lens app at its core is an AI powered app that helps you with your chart analysis. So instead of spending hours and hours and hours doing chart analysis, it helps you to just confirm your bias to know whether you should buy or whether you should be selling, just like an extra confirmation for you're trading, right? And instead of why we are also doing that, we don't just want to make sure that you're just copying trades, because of course we also give signals. So we also have these live sessions every Wednesday where we actually teach you what to do. So even if you don't want to use AI apps to do whatever you want to do, we also want you to know how to trade by yourself, because you also need to understand, even if the app gives you signals, you need to understand, okay, why is the app giving me the signal, why is the app telling me to buy here, why is it telling me to sell here. So that's why we also have these live sessions to help you understand every aspect of trading, right? And today we are actually going to be going in depth into technical analysis. If you watch some of our live sessions, if you've watched some of our live sessions, I think our very first live session we talked about technical. Okay, our second live session, if you just go down to the live session, you see where we had a session about technical analysis. We explained what technical analysis is. So in this live today, we are going to be looking at actual charts. We are going to be having actual trade analysis, explain all those things. You've seen them playing out live, and if you see any valid trade setups, we'll have live trading live tradings here right now. Emmanuel, oh Emmanuel, it's nice to have you here, Emmanuel. I know you from the community. It's nice to have you, Emmanuel. Welcome, welcome, welcome. Okay, so joining from Lagos. Oh wow, you're in Lagos. Nice to have you, Emmanuel. Right. Okay, so today we are going to be having like actual live analysis and trading sessions, and Hosanna is going to be anchoring that. And if you guys are in the community, you know Hosanna. Hosanna is always the one dropping analysis in the community. So he's our technical analysis guy. So he's the one going to be taking us on this live analysis today. So Hosanna, welcome, and over to you.
Welcome, 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 everybody.
Oh, sorry,
Right,
sorry to
good
interrupt
evening
you,
from
Hosanna.
wherever you come.
Just a moment. Sorry to interrupt you. Daniel is also here now. Daniel, is nice to have you, Daniel. Daniel, oh, of course, everybody knows Daniel is our celebrity mentor. He's our number one mentor, our lead mentor in the Fxlens community. So let's him just go first, and then we can continue from there. It's nice to have you, Daniel. Welcome.
Welcome, welcome, everyone. Zara has been doing amazing here. Zara has been doing amazing here with everybody. Her introduction, her everything, her mission statement about what we are doing, incredible, incredible, incredible. Hosanna will take it after now. He's going to talk for 5 to 10 minutes before I come up to talk about trading. So, what we want to do today is to break down technical analysis for you from the beginner point of view. What is technical analysis? How should you think about it? Now, Hosanna drops signal in the community as well. So, if you're not in the FXLens community, join now. Join now. We took a loss today in the community. We took a loss today. But then that's trading. That's just how trading is. You lose, but you win. And when you win, you make sure that that win counts like mad. We took that loss today, but don't forget, yesterday we took like 2 wins back to back. So trust me, we are still profitable. We remain profitable. So Hosanna, you're gonna just talk about what the concept of technical analysis is in like 5 minutes, just a basics of it, and then I'm going to take it up from there and talk more about technical analysis.
All right, welcome. Thank you so much, Daniel. Thank you for the opportunity. Thank you for everyone that is here, that has joined us from Ghana, Lagos. Right, thank you, beautiful people. So we'll just go straight into it, yeah. So without wasting our time, and technical analysis for me is a thought process, right? It's where your mind is at a particular time, right? It's how you're thinking at a particular time. Because take it or leave it, yes, the psychological aspect, in fact, every aspect, how you're feeling before you go into a trade is what comprises of technical analysis, right? And I actually tend to before I enter a trade, there are things I look out for personally, right? I look out for the structure of the pair. First of all, you have to select the pair you want to trade, whether you're doing crypto, whether you're doing forex, whether you're trading indices, whatever you're trading, even stocks, right? You make sure you select the pair you want to trade first of all, right? After selecting the pair, you now look for look for the structures, right? Structure of that pair to get your buyers, whether it's trending upwards or it's trending downwards. You have to first of all know where the market or price is going to. Then after your structure and you've gotten your buyers, you now go to the second thing I look out for, which is liquidity. And then the last thing is your point of entry. So three simple steps, right? I know a lot of people talk about double top, premium, plenty things, and a lot of English, right? But I tend to look at it in a very simple way. Know the pair I want to trade, get my buyers if it is trending upwards or downwards, right? Or if it is ranging, know where my liquidity is, and then mark out my point of entry, my POIs, where I want to take that trade from, where I want to enter from, right? And where I will be exiting from. A lot of times people talk about entry, and take profits. They forget about the exit. A good business is also good where you know how to enter, know how to make profit, and you know how to actually exit from that business. So that's my 2 cents, right? I'll hand it over now to Daniel, so he can continue from there and actually show us live, right, on his own thought process on how to trade. Thank you. Over to you, Daniel.
Great, great. I like the insight you just shared now because it all boils down to two things when we are trying to do technical analysis. And that's what we'll be doing throughout this session, right? It boils down to two things. Where am I entering this market? And where am I going out of this market? How do I enter and how do I exit? You see this simple thing? This is the simplest thing in trading, and this is the thing that has made most people make the most money out of trading or lose the most money from trading. So before we start, as we start this session, what really is technical? Have anybody heard of technical analysis? Like you know a bit about technical analysis already. I want you to drop what is technical analysis in the chat, or drop some W's, like, or drop something in the comment. I don't know or I know. Because right now I want to tell you what technical analysis really means. So what's that? What's technical analysis? W's in the chat, guys. Um so technical analysis is very simple. It's very simple. It is using past price actions to project what the future outcome of the chart is going to look like. I'll repeat it. Technical analysis is using past price action to figure out what future price movement is going to look like. Technical analysis, for the third time, is using past price action to figure out what the future price movement is going to be like. That FX, I see you. That FX, I love what you do in the community. I love that you're active in the community. Seriously, keep it up, bro. So that's what technical analysis mean. Now, I'm going to share my screen because we are going to be looking at some things around technical analysis. This class is not supposed to be a long class, right? We just want to show you how what would you understand by technical analysis? How do you get started with technical analysis? What should you look out for when you're trying to analyze technically? Now, there are different type of analysis, and you should know that already. If you don't, I'm going to mention them now. There is fundamental analysis, there is sentimental analysis, and there is technical analysis. Our focus for today's class is technical analysis, just technical analysis. In this class, we don't care about news trading. We don't care about news trading. We don't care about what Trump is saying, all that. Those things matter in trading, yes. But for this class, we are purely talking about technical analysis, past price action, and how we use that to interpret what's going to happen in the future. And welcome, because if this is your first time in this type of class, then you're in for a ride. Let me share my screen right now. I've not even looked at this chart in a moment, but we are going to look at it together right now and apply some technical analysis concepts to it so that these figures will start to make sense to you. Um, where did they share screen on this place again? Hold on, I'm looking for where the share screen button. Okay.
Have you figured it?
Okay. Can you guys see my screen? Okay, I need to bring it on stage. Yeah, add to stage. Okay. If you can see my script, if you can see my screen, double is in the chat. Tell me I can see your screen in the chat if you can see my screen. Says I'm talking like a streamer, bro. I want to be a streamer. I want to be like Kai Sinat, or be like Kata Efi, or be like Shank. If you can see my screen, W's in the chat, bro. W's in the freaking chat, bro. Because I want to start going, oh. I want to move, oh. I want to move, oh. Better tell me that W's first before I change my mind and end this class. W's, yeah, I want to be like Pella too, bro. Everybody, everybody. Okay. So what can you see on your screen right now? You're seeing my chart. You're seeing up and down movement. This is GBP USD. Who knows the full meaning of GBP USD? Let me see how many. Let me see the traders with the level of traders we even have here. What's the full meaning of GBP USD? GBP USD. What's the full meaning? Because that will even help us to gauge the level. The level people are at in this class. Full meaning of GBP USD. Who knows that? Full meaning of GBP USD. Let me see. I'm looking at the comments, so I've not seen response. Full meaning of GBP USD. Hey, hey, what's full meaning of GBP? GBP full meaning. I mean, we are a couple of people here. Somebody should know the full meaning of GBP USD. Okay, British pounds versus dollars. Okay, cool. Yeah, British pounds. Okay, yeah, British pounds versus United States dollar. Right, that's the full meaning of GBP USD. Okay, cool. So, what are we looking at? We are looking at some concepts here, and that's what I want to share with you throughout this class. We're going to look at some things that pertain to technical analysis, things like market structure, things like support and resistance, things like candlesticks, and how to read them. So we are looking at market structure, support and resistance, candlesticks, and how to read them. And we are also looking at let's see one more because I wrote the 4 things down that I wanted us to focus on. Yeah, okay. We are also looking at time frames, time frame analysis, the big picture versus the small picture. So we are looking at, remember what I said, we are looking at market structure, right? We are looking at support and resistance, okay? We are looking at candlesticks and how to read them, and we are looking at time frame. These are the 4 things I'm going to cover, and then we'll call it a day. So the first thing we want to discuss is market structure. What is market structure, right? Market structure is the pattern that the price is forming. Okay? Market structure is the pattern that the price is forming per time on the chart when you're looking at it. So we have 3 basic market structures, right? We have the uptrend market structure, we have the downtrend market structure, and we have the consolidating market. Okay? We have the uptrend, the downtrend, and the consolidating market. These are the 3 types of market structure we have, right? So what is an uptrend? An uptrend is a market that is consistently making a series of higher highs and higher lows. An uptrend is a market that is consistently making a series of higher highs and higher lows. So let's look at it. Look at this chart that you're seeing right here. This is GBP USD. And if we look at this market closely, what's this market doing from here to here? From here to here. What's this market doing? This market is making a series of higher highs and higher lows. Where is that? There's one drawing tool here that I think I can use to illustrate one part. Yeah, this. So look at what an uptrend looks like. A high, a low, another high, another low, another high, another low, another high again. Let me just stop here. So this is a trend, a trend. You know, when something is trending, something is raining, you know, something is buzzing around. So now this is a trend in the market, a movement in the market, but this time around is moving towards the upper direction. So whenever the market surges up, corrects itself, surges up again, corrects itself, keeps doing that movement. It is doing it, but it is doing it trending in the direction of the upside. So this is a high, this is a low, this is another high right here, this is another low right here, this is another high right here, this is another low right here. But you notice that in succession of the highs and low, the higher high, the low is always higher than the previous low, and the next high is higher than the previous high. Let's look at it in actual chart, right? If you look right here in this chart, you could see the same thing playing here. You see a low here, you see it went here in this place. Let me make this thing thicker. Let me make it thicker so that people can see it very well. I'm going to put it at 3. So you see the low, I'll delete this one, do it again. A low is right here. It came here and it gave us a high. It came here, another low, another high right here, another low right here, another high right here, another low right here, another high here, small low. It went up again, surged up for a high, low, a high, a low. This one came down almost the same level. This is another concept, but we are not looking at that today. A high here, a low. So what do you notice? A high here as well, a low right here. What do you notice? You notice that consistently the market is producing a series of highs and lows that are higher than the previous levels. This is what is known as an uptrend. Okay, this is what is known as an uptrend in the market. A market structure where the market is consistently producing a series of higher highs and higher lows. All right, now that we've discussed uptrend, this is an uptrend. Let me see. Text 2, I write it right here. Uptrend. This is an uptrend, okay? Can this even be bigger? I want it to be big. Let it be shining in everybody's eye. This is an uptrend. I hope you guys are with me. I hope you guys are with me because we are going crazy. This is an uptrend. All right, so let's go to the next one. Remember we said we have the uptrend. The next trend we have is what? What's the next trend? What's the next trend? After uptrend, what's the next one? I'm going to clone this, bring it right here. And thank God all the trend is showing in this particular place now. All the trends are showing. So we have the downtrend. We have the downtrend right here. So what was a downtrend? A downtrend is a market that is making a continuous series of lower highs and lower lows in the market. In a downtrend, the market is making a continuous series of lower highs and lower lows. Let me update some of my community people that are currently live. Hold on. So that we go deeper. Before I was here, but you did not tell me. I'm sharing update now. At the cut soup, you go use and bath, or you want to stay where you are. You know. That's my phone. Okay. Okay, I don't know what's happening on my phone. Okay, let's continue. My phone, I don't know what's happening. Um, a downtrend, you're making a continuous series of lower highs and lower lows. So look at it. A high here, a low right here. You see the next high. You see the next low. You see the next high. You see the next low right here. You see the next high right here. The next low right here. The next high right here. And this low right here. Okay? So you see this, This is a downtrend, and this is an uptrend. This is a downtrend, and this is an uptrend. In an uptrend, remember higher highs and higher lows. In a low trend, in a downtrend, remember lower highs and lower lows. This is what the market is. So when you hear somebody say the market is trending, the market is trending, it can either be trending in two directions. It can be trending to the upside, which is the uptrend, or it can be trending to the downside, which is the downtrend. So whichever direction it is trending, it's good to know that market structure, and then you capitalize on that to make money. Because remember, at the end of the day, in this chart, what we are trying to do is to make money, right? So you capitalize on the current trend to make money for yourself on the chart. All right. Um, Now that we've discussed uptrend, downtrend, the last one for us to discuss. I hope you guys have this because I want to delete it. If you have it, if you wanted to, please, why are you using 4 hours time frame? Don't worry, we are coming to time frame analysis. Right now, I just used any time frame to illustrate what we are illustrating. So I went to a high one to illustrate what we are illustrating. So this is uptrend, this is downtrend, and the last type of trend we want to do is the consolidation. So let me check for a nice consolidation that's happening on the chart. A nice consolidation happening on the chart. Now I'm seeing consolidations in all these places, but I'm looking for a very clear and nice one to use. Let me see. So that it will be so clear, because as I'm looking at this, I'm seeing consolidations, but I want one that would allow everybody to understand what I mean. Okay, yeah, this one is a good one. Hmm? Where did that one go? Hold on. I'll get it back. Okay, this is a good one. This is a consolidation. Now, what is a consolidation? A consolidation is a type of market movement where the market is indecisive. It's an indecisive type of market. The market is neither trending upward or trending downward. The market is trading just in a particular zone. The market is trading in one particular zone. That's when we say the market is consolidating. The market is consolidating. It means the market is trading in one particular zone. Okay? The market is trading in one particular zone. Remember, the reason why we are learning about market structure and learning on all these things under market structure is that we are not trying to fight the market. Okay? We are not trying to fight the market. We are trying to look at what the market is doing and follow it. We are not trying to change the market though. We are not trying to influence what the market is doing. In no way can we even influence what the market is doing. All we are trying to do is to look at what the market is currently doing and try to follow the direction of the market. Okay, so this is what the consolidation market looks like. And I'm going to put it in a box, in a range box, in a rectangular box, so that you fully get the picture of what this is doing. All right, something like this. So in a consolidation market, you notice something that is very simple. The market is trading in just a particular zone. Look at it. This market from here to here, yeah, it did all these movements right here, but it was neither creating a higher high or a higher low, back to this point where it started from again. The only time it got to the bottom, it got back to this point it started in, and it pushed back up. Now it pushed up again, back to this point, it just first did something like this. Let me even add it. Then back to this point again, right here. And boom, 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 it went down, it went back to this zone again right here. See, these are money making opportunities, because imagine spotting a consolidation and it lines up with other confluences of yours, and then you sell from this bottom and you're selling back to the top. This is how traders make money as well, even in consolidation markets. So you see, this market rose up to this point. It still couldn't break up or down. It came back to this zone again, rose up to the top again, and finally, boom, it came here, and then it broke out and continued to the downside. Now, all these movements the market was doing from here to here, down, back to the top again, back to the bottom again, to the top again, to the bottom, is a consolidating market. The market is indecisive, it's trading in a particular zone. Okay, there are different reasons that can cause a consolidating market. Different things, like even fundamental things, can cause a consolidating market. The weekend can cause a consolidating market in some pairs that trade during the weekend that are not specific forex pairs. Holiday period, when maybe the US is having a holiday or something is happening, so money is not moving like that. There's a holiday in London, money is not moving like that. It can actually cause a consolidating market. Different factors, right? So, but in a consolidating market, there are still strategies to make money from a consolidating market. Okay, there are still strategies to make money from a consolidating market. But for now, understand that there are three market structures: the uptrend, the downtrend, and the consolidating market. Okay, these are important things you need to know about the market. Now, which other thing did I say we'll discuss? What's the next thing that we are supposed to discuss? Remember, we have one, market structure. What's the next thing that we are going to discuss? Remember, we are talking of technical analysis. We are talking of um, strategies in technical analysis, or things that we use in technical analysis. And we talked about that we are going to be looking at four of those things, and we've talked about one, which is market structure. And in market structure, again, I've described that we have three types. We have the uptrend, we have the downtrend, and we have the consolidating market. So apart from market structure, what's the next thing that I said we'll talk about? Okay, we are talking about support and resistance in the chart. All right, support and resistance. What is support and resistance? What is support and resistance in the market? What is a support point? What is a resistance point in the market? I want you to think about this in terms of normal life. Okay, normal life, normal building. A normal building, what would be a support point and what would be a resistance point? When you're sitting down on a chair, what are you doing when you sit down on the chair? The chair is supporting you. The chair is down, it's holding you up. Okay, it's holding you up, so it's downward. In a resistance point, if I stand up in this my room and I jump up high enough, my head is gonna hit this fine POP right here in this room. It's gonna hit it, and it has resisted me from going even further and above. It's very simple. Sometimes we just think about these things in terms of trading, and when you're thinking about it in terms of just trading something abstract, then it doesn't make sense like that. But when you bring it down to think about it in terms of usual normal life things, then you see it more clearly. So support points, even on the charts, are levels on the chart that market is finding it difficult to break through it downward. Resistance points in the chart are levels in the chart that market is finding it difficult to break above. Okay, for support, market is finding it difficult to break below that point. For resistance point, market is finding it difficult to break above that point. Let's use our illustration tool again. We could have a chart that's doing something like this. Okay, uptrend is doing something like this and it's going, and then finally it does something like this. Okay, let me just do this diagram this way. Remember, everything that we are discussing in technical analysis is what we are doing basically is that we are using previous or past price action to predict future price movement. So in support and resistance, same thing occurs right here. Okay, a resistance point is the place in the market that market is finding it difficult to break above, and the support point is finding it difficult to break below. Now look at an example right here on the screen. Say we have a market trending in the up direction. Remember, we talked about higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs right here. So what essentially is happening here that's making the market even have higher highs and higher lows, or trending in the direction or trending in the upper direction. Now, there are different ways to explain support and resistance, but I'll just use this one as my first way of explaining it. So let me draw a line like this. Okay. Stay with me, so that you catch it. Stay with me so that you catch it. This is the first example I'm giving. I'll give another example of support and resistance, but this is the first one I'm giving right here. Okay, so look at this market and let's talk about support. Okay, so we can say that this level right here is a support level. Why? Because market has tried to go below this level when it was creating this higher high, right? When it was creating this higher high, it has tried to go below this level, but it wasn't successful in breaking this level down to the downside, and this created a support point for us. Now, for every other place in the future, even if we extend this line down here, we would see that this place is now always important. This level is now always important. Of course, it was a resistant level somewhere here before, which it came back to be later in the future, but it didn't hold, right? So for this particular example here is a support level. Why? Because price tried to break through this level, but it couldn't maintain that break and it pushed up to the upside. This other level here is a support level too, because price tried to break beyond this level, but it couldn't, and it held and went to the upside. Now, a support level and a resistance level can change. For example, a support can become a resistance point, and a resistance point can become a support zone as well. It just depends on where the market is per time. For example, let me give you an illustration here. So you see this level right here. This is a support level for this chart, right? Because the market tried to go below it and couldn't successfully go below it, and it pushed up to the upside. But right here, you can see that the market, it came down here and it was a support level for this point, but the market broke beyond it and came down to this point. Now, what happens when the market tried to go up back to continue or to make a higher high, another higher high, even after it had broken out of this market structure? Now, this is why you'll be hearing, sorry, let me take you back a bit. This is why you'll be hearing things like change of market structure, break of structure, all that stuff, when it's breaking out of the usual structure it has been forming. Here, it was forming an uptrend structure like this, but then right here, it broke out of it. It broke the previous higher high or higher low, and then it came here. So what happens here now? This support line that we drew here, which is a support from here, has become a resistance point. It's a bit confusing for you to understand if you're starting it at first, but stay with me. This support right here, remember, the support is below, resistance is above. Support, it means that the market is trying to break below a certain level, but is not able to. A resistance point, the market is trying to break above a certain level, but is not able to. So if you look at it here, you will see that the market tried to break below this, it was unable to, it went up. Finally, even when it broke below it, what happens? This previous support level has now turned into a resistance zone. So look at it, the market tried to break above it again, and then it came down. One thing you quickly do in forex trading as you get better with trading is to look at levels and zones, not in form of lines, because that's where many traders make the mistake. You're looking at levels and zones in form of lines, lines that you're seeing on the chart. But no, not in form of lines, but you look at them in form of zones. These are zones. Because some people will say here, oh, but isn't this supposed to be the support level? Why did this slightly break above it? No. It broke above it, but it's in the same zone. A zone is not just a line. The market is not really respecting lines in the chart. Your lines doesn't matter to the market. Your drawing lines, it doesn't matter to the market. The market is respecting specific zones and area in the market. So rather than just relying on the line itself, this is why when you're analyzing, when you're doing technical analysis, you need multiple confluences to line up for you to take the trade, not just seeing one thing and taking the trade. But no, the market has come up here, it has come to a new support level, a new resistance turned support, or a new support turned resistance, like in this case, and then we'll watch out for other signs here, and that would influence our decision to know whether the market is rejecting this resistance or the market is breaking it. Now in this particular example here, the market rejected it and came down, and you see right here again, look at this, observe this closely. This was supposed to be a resistance point for this market, right? But the market broke it and it became a support point for this market right here. But now the market has continued trending upward, and finally it has turned into a downtrend. Now the downtrend has started forming, but notice that this point in the market isn't still useless. It's not useless now, because now the market finally came to this point, and guess what? When it reversed to go up to correct, it got back to this level, which was support for this point, but now it is resistant for this point. Okay, it got back to this level and it respected this level and continued moving to the downside. You see why we say that technical analysis is looking at actions from the past to predict the future. It means that every resistance and support point in the chart in the past is a relevant context to what the market will do again when it gets to that point. So you cannot just see a market and be like, I feel like it's going to buy. My mind is telling me that this market is a sell market. It's going to sell. No, no, no. You have to predict. You have to look carefully what has happened in the past around this zone before. The moment you know what has happened around that zone before in the past, then it would help you to realize what is potentially supposed to happen, or what would potentially happen again as the market approaches that zone. Now, together with all the other confluences you have, it will now point you to a direct entry on where to enter into that market. You'll be wondering, we have Fxlens, why are we teaching all these things? We are teaching it for you to know, even how the tool works, what the tool sees before it analyzes that chart. It helps you too with confirmation, for you to know, so that you can analyze by yourself and use Fxlens as a confirmation tool. It means that Fxlens can now become one of the armor in your armory, and not just the entire armor. When you get better with trading, you would even have more success rate with using a tool like Fxlens, because now you can analyze and use Fxlens as an extra confirmation tool for yourself and in your own trading. So did you understand what the concept right here with support and resistance? Do you understand the concept right here with support and resistance? Tell me in the chat if you understand support and resistance. Did you understand it? Another big example that I'll just give in this point for support and resistance is this zone again that we mentioned here. If you look at it, here is the support point, here is a resistance zone. It came back to this resistance zone, it bounced back to the support zone, it came back again to this resistance zone, it bounced back again to the support zone, boom, 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 back here. You see, it couldn't break the resistance zone, so it came down to the support zone and finally broke down to the support zone. With technical analysis, we will now get to learn later on, maybe in another class, even other confirmation mechanics, although we still have some to discuss here, even other confirmation mechanics that you can use to identify where to actually enter. Okay, you've seen that it has broken out of this zone, but where should I actually wait for an entry to enter into this market even after the breakout happened? How do I identify an entry to enter into this market? Okay, this is something that we'll look at, but let's quickly run through the other two because our time is fast spent. Let's run through the other two that we have. We have candlesticks, how to read price. Okay, each candle shows four things. We have the open, the close, the high, and the low. The open, the close, the high, and the low. Once you understand this, it will definitely help you to read the chart further. Okay. Thank you. Okay. Once you understand this, It will definitely help you to read the chart further. So look at this. Look at this. This is a candlestick. Let's look at this candlestick because we are discussing candles right now. Now, where is the open price of this candlestick? The open price of this candlestick is right here. This is the open price of this candlestick. Right here is the open price of the candlestick. It means where the candlestick started when it started. We're on the 1 hour time frame right here. So this is a 1 hour candle. And this is right where the candlestick started. Right here is where the candlestick started. Now, where is the close price of the candlestick? This right here is the close side of the candlestick. So here is the open price, here is the close price. You can see the price at this part of the screen, this part of the screen. So look there carefully, you see the price 1.33889, somewhere around there. That's the close price. This is the open price. Where is the lowest point this candlestick got to in its whole formation? If you're following, you'll get it. Okay, this is the lowest price this candlestick got to. So this candlestick opened here. At some point it went down to this point before it finally went up. Now, where is the highest place this candlestick got to in its circle before it ended in 1 hour? At the highest peak of this candle, it got to this point. At the highest peak. Now, it got here, it finally came down here and closed here. This is the life cycle of every candle. The OHLC. The OHLC. The open, the high, the low, and the close. The OHLC. That's the circle of every candlestick. So let's do it for one more candlestick. The next one, this is the open price. This is the lowest point the candle got to. This is the highest point the candle got to. And this is the highest point the candle got to. And this is the close of the candle. This is the open of the candle. If you look, this one it barely even has a wick, just small wick. So it opened here, and immediately it opened here, it started pushing up. Okay, so this is both the open price and the lowest point of the candle is down here, right? And then this is the highest place the candle got to, and this is where the candle closed at. Okay, this whole thing would help you later when you start looking at things in the candle, things like multiple wick rejection at a specific zone, combining it with resistant points in the market and all of that. Then the open price, the close price, and all this would now start to make more sense to you. This is the third one. The last one we are discussing is time frames, the big picture. We have the higher time frame and we have the lower time frame. The higher time frame and the lower time frame. What's the higher time frame? What's the lower time frame? Now, we have low time frames like the 15 minutes. We have the 5 minutes chart. We have the 15 minutes chart. We have the 30 minutes chart. We have the 1 hour, 4 hours, and 1 day. We are going to classify high time frame as 4 hours, 1 day time frame, weekly time frame, etc. And we are going to classify lower time frame as 1 hour, 30 minutes, 15 minutes, and 5 minutes. Now, there's no exact real definition of what a higher time frame is per se, but in a general view, we view the daily chart, the weekly chart, the 1 hour chart as the higher time frame, and then we view things like the chart in minutes, 30 minutes, 15 minutes, 5 minutes as lower time frame. Why? Because it's just logical to do it that way. But in reality, if I'm a scalper in the market, if what I do in the market is I just enter into the market to scalp trades, I just enter into the market, hop on quick trades, and go out of the market. There are people like that, right? If I'm a scalper, it means that my higher time frame that I'll be looking at would probably be the 1 hour chart, because typically the charts that scalpers use to scalp is probably 5 minutes and even 1 minute charts that they use. So for them, 1 hour is even a very high time frame for them, and 5 minutes, 15 minutes, 1 minute are their lower time frames. Because I'm mostly a day trader, my higher time frame is the 4 hours chart, the daily chart, and the weekly chart. And my lower time frames are my 1 hour chart, 30 minutes chart, 15 minutes chart. Okay, so why does it matter to analyze on your higher time frame but still go down to your lower time frame when you want to take entries? Why does it really matter to do that? Well, this matters because the higher time frame gives you a broad overview of what is happening in the market per time. The higher time frame gives you a broad overview of what is happening in the market per time. Let me show you a quick example. If I go to 5 minutes right here, there's a lot of noise on the 5 minutes time frame. What would you say is happening in this market from a 5 minutes time frame? What's really happening here? What's really happening? Well, if you ask me, it looks like the market has been ranging at some point here, and then at this other point it went up a bit, but the movement is just so noisy. You don't really understand what's going on. But the moment you zone out of the, you zone out, yeah, you zoom out a bit into the 15 minutes time frame, then it begins to make a bit more sense, like, oh, the market is a bit choppy though, is a bit choppy, but at the end of the day it's trending towards the up direction. Look at it now, the market is trending towards the up direction like this. Even though it's choppy, it's still going, it's still finding a way to shall be going up. But are you saying that on a 5 minutes time frame we couldn't understand that this is what was happening because there was so much noise in the market? Now, if you go to the 30 minutes one, you begin to see the picture more clearly. Oh, okay, okay, okay. Look at what's happening now. The market has been trading just within this zone right here, because it started here, it has gotten to this point, it came down to almost near this point again, now it's going back up and it hasn't broken out of this place. So from this point here, yes, the market is trending up, but overall in this time frame, in this place, the market is actually, you know, doing a bit of consolidation because it hasn't broken out of this zone that it formed. Now you zoom out to the 1 hour and you can see, true, my theory is quite correct. Okay, it's really showing because right here it did this, it started here, it did this, it went up to this point, it broke above it a bit, like a fake breakout kind of. Then it came back down and it started trading in this zone again, and now it's right here again, which coincides with here, which is a resistant point, like we explained. This is a resistant point, and you see the market is now rejecting at this zone again and might possibly come back downwards. So you see that as we consistently zoom out of the chart, as we consistently zoom out of the chart, the picture of the chart becomes clearer to us. What's happening in the market becomes a lot clearer to us. Now I'm going to zoom out again to the 4 hours chart. So you now see 4 hours chart. Okay, the picture is strong. So overall, the market is actually trending to the up direction like this, but there has been a change of structure, change of market structure in the market, because take a look at this now. The market the market was making, now what I'm doing now is called a trend line, and the trend line is used to just mark out the trend. It's trending upwards, so this is an uptrend line right here, and the trend line, you're trying to connect the lower lows in the chart. For an uptrend, you're connecting the lower lows in the chart in a single line to identify when the market is coming back to touch on that trend line, because when the market come down to touch on a trend line or that trend zone, there's a possibility for it to go up. Remember, you're looking at the line not just as a line but as a zone. So if you're actually drawing it as a zone, it might be as thick as this, and now you see that it coming down below the trend line a bit doesn't really matter in the grand scheme of things, because it's still trading around the same zone. But to keep it simple, we usually use just one line to illustrate it. So you look at it right here, the market was trading in this trend, right, an uptrend, and here it broke the structure of the uptrend, and then it started trading in the down direction, and now the market has finally the market got to this point and started trading upwards back again. So we can say that the market is trading in this zone from here and hasn't broken the zone. So you see our theory of the market consolidating is now even becoming clearer. The first consolidation we saw was even on a smaller time frame, which was right here. Sorry, which was right here. This was the first consolidation. But now, even on a higher time frame, we actually see that there's a bit of a consolidation going up and a bit of change of structure happening. What I'm trying to explain is that with every iteration of zooming out of the chart, it helps you see the clearer picture of what's happening on the chart. Okay? Now, depending on the system you're trading, let me delete this. Depending on the system you're trading, the time frame you would pay the most attention to matters a lot, because while the direction of the market, or while the market can be in an uptrend, or the market can be in a downtrend, or the market can be consolidating on a higher time frame, the time frame you're looking at per time when you're trading and the time frame you want to take actual signals from or actual entries from is the lower time frame, because it shows you what is happening right now. The lower time frame shows you what is happening right now, not what's going to be the long picture, like in a day or in a week the market will get to this point. Yes, the market can get to that point in a day or in a week, but I'm entering now, I want to make money now. And don't forget, the market and trading forex is not just about spotting the direction, it's about knowing where to enter for that move. Okay, it's about knowing where to enter for that move. For example, let me give you an example. Imagine you come on the day time frame. You come on the day time frame like this, and then the market is trading somewhere here, okay? And you identify in this market that is trading here that there is a buy. This is an uptrend. You've drawn your trend line. This is an uptrend, so I want to enter for a buy. Imagine entering for a buy somewhere here on the market. You enter a buy, what would happen to your money? Your money has gone for vanishing. Why? Because while you got the position, the trend right from this time frame, you got the trend right. There is an uptrend. What you failed to get is that you were supposed to scale down to the smaller time frame to know what is actually happening right now. So let me show you an example of this. So this is an uptrend, right? But if you enter here on the daily time frame, what's going to happen? This is, remember, on the daily time frame, every single candle represents a full day of what happened on the chart. So this is a full day of what happened on the chart. This is another full day of what happened on the chart. It means if you entered here, for the rest of that day and for the rest of even the next day, the market was selling. So what's going to happen to your money? You're going to run out of capital, or your stop loss is going to hit and you're going to get exited from this trade. Not because you did not know the long-term direction, but because in the short term, that wasn't the direction to take a trade on. Okay, so remember, we've marked this point. Now, what would we have done to get a better entry? We would have scaled down to at least the 1 hour chart first. Let's go and identify that point we marked. So you see the point we marked. This is the 1 hour time frame of the point we marked. Now, if you had scaled down to the 1 hour time frame, you would have noticed something. What would you have noticed? You would have noticed that as at the time when you were trying to enter a trade for a buy here, the market was in a state of a bit of consolidation. Okay, the market was in a state of consolidation, something like this. Something like this. Started here, went up to this point, finally went down before it went up again. The market was consolidating. There was a lot of noise in the market as at this time. And if you drew another trend line right here again, or an uptrend, you notice that the market has even broken away from the uptrend and has started creating a bit of lows. So you see, if you had scaled down to a smaller time frame, you would have realized this even more quicker, and that would help you influence the direction of the market that you are going to be trading. Okay, so the upper time frame is to get the general idea of where the market is currently at. But to get exact entries, where do I enter into the market, you need to scale down to the lower time frame, especially if you're a day trader. Now, there are some traders that take even position traders and big traders still scale down to the lower time frame to know what's happening, but they take their main decisions from maybe the 4 hour chart, the 1 day chart, and all that, because their stop loss is so huge. But you don't have that leverage, you don't have that capital, you don't have that leverage to be using such big stop losses. So you and me, we need to come down to the lower time frame, the 1 hour chart, or even most times I even take my precise entry from the 15 minutes time frame. Yes, I take my precise entry from the 15 minutes time frame because there are a couple of things I want to see to make sure that my entry is right. So now we've talked about the upper time frame and the lower time frame, the higher time frame and the lower time frame. I hope you guys are following me. I hope some people are following me right here. I hope some people are following me right here. We'll soon come to the end of this class. And next time we meet, we'll now talk about precise entries. We'll talk about things. Next time we meet, we'll talk about things like multiple weak rejections in a particular place. We'll talk about things like um, bullish engulfing. We'll talk about things like bearish engulfing. We'll talk about things like dodgy. Okay, we'll discuss all these things. Remember, when you're trying to enter into a trade on the market, you're not entering from just seeing one thing, but you're entering in the confluence of multiple things. That's what we call confluence. A confluence are a list of things you want to see at a specific zone before you take a trade in the market. So your confluence and list of things you want to see before you take a trade can be things like, I want to know the direction of the market structure. Okay, you identify that the market structure is a downtrend. So let's look at that quickly, right? We'll just look at that with this spot that we are in. Okay, so your confluence can be to identify that, okay, the market is a downtrend happening right now. There is a downtrend happening on the market, and then maybe you draw a trend line for that downtrend happening on the market. All right, so you know that the market is on a downtrend. Secondly, you want to also check that hold on. Secondly, you want to check if there is a support and resistance zone at that level, or is it in a support zone? Is it on a resistance zone? That could also be your confluence, support and resistance zone. Next one, you want to check for your time frame. What time frame is it on? Based on the time frame you're trading, you want to check for things like multiple weak rejections at that zone. You want to check for things like supply and demand too, which is like support and resistance, but we'll talk about that more next time at that zone. So with all these things, maybe you see like 3 to 4 things on the you see like 3 to 4 things out of you see like 2 to 3 things or 3 to 4 things out of your 4 confluences, because it's advised to have at least 4 confluences or 3 confluences. So to know that that place is a strong place for entry, you want to see like 3 things, 4 things, or at least 2 things that confirm your position on the chart. Because when you don't see those things, then there's no way you can take successful trades. So you want to see at least 2 things. In fact, you want to see 3 things that confirm that zone that you want to enter at. And once you see those 3 things, it gives you more confidence to enter. Remember, don't take a trade off just one thing, like, oh, there is a downtrend happening, so I want to hop on the downtrend, and then you just enter from anywhere. No, no, no. The place you enter into the market to trade matters the most. The place you enter into the market to trade matters the most. Your entry position. So multiple confluences in the chart is definitely one thing that is going to help you to remain profitable and get right entries. I think I'm gonna come to a close on the technical analysis class here because it's 8 already. A lot of things to talk about, but we'll talk about it in our next class, and then we'll probably check for a live trade and see how we can place a live trade. We'll look more at gold next week. We looked at GBP USD price action today. Next time we'll look more at gold and then we'll talk about patterns in trading. We'll look at multiple week rejections. We'll use Fxlens to analyze a trade, do a confirmation right here, and then enter into that setup and watch it. Watch what's going to happen. Win or loss, we'll be right here. We'll be right in the community to roll with everyone. If you've stuck with me from the start of this class to the end of this class, leave some W's, leave some comments in the chat. Let me know. Setting the trend line is still difficult on my side, boss. Okay, cool. I think we have a lesson on trend line on the Fxlens app. Let me check it right now. Let me check trend line. Okay, I'm not seeing a lesson on trend line, but we should have one. We are going to upload a lesson on trend lines, how to set trend lines more. We already did it here, but don't worry, next week when we meet again, we'll do it again step by step. Maybe if I see you active on the group this week, then that next week I might even bring you up. The next time we'll have a technical analysis class, I might even bring you up, on the call so that you can try it out yourself in front of us if you're with your laptop, and then see how it works. Okay, so good work everyone, good work. At this point I'm gonna just hand over to Zara back to close for the day.
Oh my god, that was a really, really powerful session. And that's why we always speak about that. So whenever I see him, I'm like, okay, no, Daniel should be the one to like take us, and that was a really good one. And one more thing I would love to add to what he already said to Daniel, the other than in the comments. So the thing is, if you're quite new to trading, these things can be a little bit complex. It's actually not complex, but if you're new to trading, because it's something that you just started, it might be a bit complex. So what you need to do is that you need to watch this video over and over and over again. If you watch this video like 2 or 3 times again, it will make sense to you. And while you're watching, you practice along. Now, forex is not a passive skill. It's not something you learn in absentia. You have to actually be practicing forex to get it. When I started trading newly, every single I'm not let me not exaggerate, I used to spend at least 7 to 10 hours on my chart every day just watching the charts play out. Like, I'm not even reading, I'm just looking at it, watching it. You need to have a time to do this. Now, I'm not saying you should invest 7 to 10 hours. I did that because I had that luxury of time, right? If you don't have that luxury of time, I think what you should do is create out a specific time, maybe an hour a day or 2 hours a day, that you are studying the charts. Even if you're not trading, just watch the charts play out, right? So while you're watching this video again, okay, so Daniel, this is what you're going to do. You have to watch this video again, and as you're watching this video, have your charts by the side. So while he's doing what he's doing, you're also doing it on your own. So when you see it play out by yourself, it will make more sense to you. So that's just one tip I can actually help you with. All right. Sorry, I can't pronounce your names, but I know that Thani is at the end of your name. He says, Zara, can you assist me watch everything, but I don't understand exactly what I said. Like, you just need to watch the videos over and over and over again. Forex is not a passive skill. You have to actually invest a lot of time. Forex, it requires your time, your money. So you have to invest a lot of time just to watch the video over and over and over again. Then it's gonna make a lot more sense to you. We're supposed to actually look at trading journals and how to like make your own trading journal, but we've spent quite a lot of time, and we're going to have to move this to another session. We keep telling you guys that we have a lot planned for you guys, and it's even as if we are begging you guys to join this live, because we have a lot of value we want to give you guys on this live, because we want to make sure that you guys become profitable. We have a lot of things, and you can see we don't even have the luxury of time, right? So what you're going to do is that you're going to always have to join these our live sessions. We have so much to teach you, all for free. Maybe very soon not for free anymore, but for now, while it's still free, you have to just be joining us every week, because we have so many. Daniel couldn't even, because no time. I have what I want to teach, but no time, so we're going to move it to next week, right? So we can't wait to see you guys next week. And what I also want you guys to do is that if you were in this live, just go to the comment section in the community, right, and just drop one thing you've learned from this live session, so that other people, I think last week we dropped what we've learned, and then to encourage a lot more people to join the live today. So we just want to keep encouraging more people to join the live and engage with the community. And if you're watching this video sometime in the future and you don't have Fxlens app, just use the link in the bio description of this YouTube channel to get Fxlens app to your phone, and also join us in the community. And we will be so excited to have you. All right, so we'll see you guys next week, and see you in the community. Bye everyone. Bye everyone. Bye
Remember
everyone. Bye
to
everyone. Bye
remember
everyone. Bye
to
everyone. Bye everyone. Bye
Zara, can you mute? Remember to follow us on this channel on YouTube, please. Follow, hit the follow button right here, and we'll see you in the community. Go drop your comments right now in the post in the community. See you guys in the next announcement will be done in the FX Lens app. Bye, guys.